Hello, investors. This is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Friday, March 28th, 4:20 p.m. Eastern Time. Coming to you with tonight's Revere Roundup Daily Market Insight video. Market state downgraded it back into a moderate correction. And if we look at the trend gauge over here, longtime viewers know in 2024, we had the four coveted green arrows, and now we're looking at the four loafed red arrows. And that just kind of tells you the market that we're in right now. Market leaders downgraded back to red. Not good action whatsoever. Short term, we're trading below the 21 EMA, medium term below the 50-day, and long term below the 200-day moving average. And as you know, GROTECTION and TurboTection has a dual mandate. We want to grow assets in uptrends and we want to protect assets in downtrends. And with the four loafed red arrows, we are in protection mode at all cost right now. And we surely did that today. We'll take a look at the final numbers. 21 over 21 list down 2.86%. Every single one of them red on the day. Big 8 down 3.57%, RG8 down 2.45%, S&P down about 2%, RSP down 1.5%, Q's getting smoked down 2.63%, Equal Weight down 2.28%, Dow Jones down 1.73%, mid caps down 1.81%, Russell 2000 down 2%, 60/40 down 0.84%, and GROTECTION down 0.68%. Risk off market distribution continues, and the name of the game is protection right now. Let's take a look at the charts. Not pretty, that's for sure. S&P 500 just textbook bear flag breakdown, rejected the back below all the moving averages, risk off, ugly day today, trend down day. We opened and it was just broke opening yesterday's low and just a complete waterfall. Look at the weekly. This is starting to look more ominous. Below the 10, 20, 30, 40 week, rejected the 40 week, pretty ugly weekly bar for the S&P, and all these moving averages are starting to roll over. It's not good to see, especially for trend followers. RSP, similar thing, bear flag breakdown, rejected the 200-day, QQQ, similar look. You'll see, I talk about setup themes. Setup theme was bear flags into declining moving averages and breaking lower. Volume elevated. I mean, it was just complete selling all day today. Broke the opening range lows. No bounce whatsoever all day. Take a look at the weekly. And again, this is starting to look pretty ugly. Below all the key moving averages. The slope of the lines are turning back over. If you follow stage analysis, this is starting to look like a stage 3 top. This whole uptrend, the 2-year bull market, was contained by rising 40-week moving average. That's starting to roll over. The 30-week was rising. Every pullback eventually led to a reclaim, and we're just living below these for now. Mag 7, nowhere to hide either. These, constitute majority of the indexes. So if the Mag 7 keeps rolling over lower, there's going to be some more trouble ahead. Similar setup to the Qs. Take a look at the weekly. Again, this huge uptrend channel line broke, rejected the 40-week moving average. Wish I could be bullish here, but there's nothing really bullish to say about these charts. Dow Jones, again, similar thing, nowhere to hide. Mid caps moving lower. Russell 2000, textbook bear flag breakdown, and the worst index. ARC breaking back below the 200-day moving average after this tried to bounce back lower. FFTY, representation of leaders, back below all the moving averages, rejected the 200-day. VIX, this is starting to spike up. So one thing that I kind of wanted to talk about today, and granted, I'm no VIX expert, but the initial leg lower was quite weak for the fact that the VIX came from 30 all the way back down to, 17. And usually when you get a big VIX drop like that, you tend to see a stronger relief rally as the pressure comes off and the markets start to rally. But, it was a pretty weak couple 100-point bounce on the S&P. And now as we're moving lower, the VIX is only at 21. So if real fear starts to come in the market and that starts to pick up, the VIX could overshoot past 30, and that likely means more downside for the market. Dollar kind of looking like a bear flag as well, rejected the 21. Gold continues higher. This was green today, and this is why we have a position in here. This chart looks a lot different when you look at the NASDAQ, right? Trending higher, relative strength line continues to make new highs. Moving average are sloping up and to the right. You know, there's always a bull market somewhere, right? And there's a bull market in gold right now, and there's certainly not a bull market in tech, semiconductors, Mag 7, all that stuff. Gold miners pulled back a little bit today, but super strong run. A little bit extended, you could say. Silver, same things, inside day, pulling back, still above the 8. Again, bull market in silver. Todd did a great section on the podcast today. Highly recommend watching that. He talks about silver, again, a nice silver stock, and then the gold to silver ratio, along with the heavy short positions in silver. We're long silver as well, as this continues to be one of the best places to be. Bitcoin, risk off when Bitcoin's going down, harsh breaks, tried to rally up through this 50 spot. That was, this left side low, rejected, and now breaking lower out of this bear flag. See if it can hold the 200-day. But again, next level below the 200 days, it's like 40 spot on IBIT. But again, no momentum. And you look at, the Bitcoin leader, MSTR, breaking lower, similar bear flag here as well. Bonds, wedge pop here, looks good, back above the 200-day. Potential safe haven trade, TLT as well. Rates, outside negative reversal, and you can see there. All right, let's get into the tail of the tape. All righty. Yeah, like I mentioned, market state, we are now in a moderate correction. VIX only at 2152, up 15% on the day. There is still some room there if it wants to move higher. We got the PCE inflation data this morning, pretty muted reaction, and going into today, all our keys were a no-go. S&P below the 200-day and the 21, Qs below both, leaders very bad. Distribution days, again, continue to come in. That's not what you want to see after the market tries to fall through. So still going to be watching the same things going into Monday, and really just watching if the indexes can gain some footing, see what the leaders can do. Is there going to be new themes emerging? Cybersecurity was one of the last standing tech-focused themes. You had RBRK leaking off, CrowdStrike, PANW, Okta. So that, sometimes relative strength in a weak market can be a trap. And that was, looked like it was potentially going to be a leading group, but market said no. And the best leading groups continue to be outside US and commodity related. Down 3, 2 days below the 8, 3 days below the 21. Expectations are negative. I mentioned the trend down day, no buyers to be found today. Sectors, gold and utilities up, 10 out of 11 spider sectors red, Bitcoin, semiconductors, software, regional banks, all these financials, biotech, it was pretty heavy distribution out there. And we did hit near, mid late afternoon, the NASDAQ and the New York Stock Exchange were tracking 90% downside days. And I think that's the first one since this downtrend started. GROTECTION today stopped out of Palantir, Dash, Netflix. We took the gains on the semiconductors hedge. It's pretty, double-digit gain in two days. Those really rolled off, trimmed SPLG, and then bought TLT on that upside reversal with, those potentially safe haven place for people to flock into. Bottom line, risk off market persists as distribution days pick up. Let's see. Let's take a look at the damage here. Every name on the 21 over 21 list red today. Mentioned GDX, BJ's. This one still looks fine. Pretty non-tech either, so uncorrelated. MP, another one in the commodities area. This one's holding up well. TGTX, this one has been holding up well as well. Pulling back to the 21 looks a lot better than most stocks, and it's biotech, so less correlation to the market. NTNX looks better than most as well, but still, it's just not much confidence buying charts like this in this market. Take two, similar thing, looks better than most, but pulling back to the 21-day. SE, this one looks better than most as well. Holding right here, got the 821.50 all stacked up. See if this can break out, or is this going to break down and be one of those relative strength traps? WGS at the 50-day, again, uncorrelated in the medical space. Yumc, China name, looking pretty good in this big base. Uber, can't rally really as well, but looks all right as long as it can hold above the 200-day, but just need more time. Okta, one of the cybersecurity names, kind of leaking off, and that group deteriorated. You had Okta, you had PA&W, right? Breaking below the 200-day. CrowdStrike rejected at the 50-day. RBRK looked like a leader here, was acting like a leader. Sharp 3 days down on heavy volume. Let's check cyber, kind of a bear flag against the 50-day. So, it's not really great action in that sector anymore. Spotify holding up decent, but breaking the 50. Doximity's breaking the 50, continuing lower. RBRK, Bros, again, they had an investor day yesterday and apparently it wasn't too well perceived. Heavy volume selling, 3 days down in a row. Lemonade, this one looks, fall off a cliff if it breaks below this, little shelf. ARC weakness, Netflix, wedge drop lower, another bear flag. Palantir, 4 days down, right at the 50-day. Robinhood, sharp rejection off the 50-day. And the video that I did on Tuesday, I believe, I talked about that setup theme, right? So HUD classifies like a high beta momentum stock. It's got a large ATR, trades very liquid, moves a lot. And so a lot of these had a similar setup, right? 20-30% rip off the lows into the declining 50-day. So the question was, can these hold, develop a pivot, put in a higher low? That was the bull case. The bear case was sharp rejection off the 50-day, moving lower. And that is kind of what happened to most of them. We can take a look at APP, right? Obviously, this one got a short report by Muddy Waters, but 20-30, I think this was like a 40% move here off here in this rising wedge bear flag. Harsh rejection off the 50-day and dumped. Take a look at Carvana, right? Similar thing. Big rally up here off the lows, rejected that declining 50-day. And there were some other hymns rallied up into the declining 50-day, bear flag rejected. So certainly for now, it just looks like a dead cat bounce and a downtrend. Obviously, very volatile market stuff. Take it day by day. DoorDash, again, kind of, it looked like it was popping up here, right through 200. Now it's coming back down hard. So um, hard to find some of the positives in the US tech momentum stocks. Take a look at semiconductors. I mean, this is now pretty much in stage 4 decline. We've been talking about this setup for weeks, dating back into early January. This had many of the characteristics that this was in a stage 3 top. Now it's starting to break down. Looks like it's heading into stage 4. And what strong bull market with tech leading really occurs without semiconductors in gear? And what's the single name that's led the whole AI revolution? Well, that is NVIDIA. And this one looks like it's going into stage 3 topping into stage 4 downtrend as well. So, sure, these could have some bounces, but the trend is down now below the 200-day, the 50 days below the 200-day as well. Multiple failed rally attempts above all these averages. Very good news being sold into, and just not great here. Avgo, another semiconductor, bear flag breakdown. All these deep seek names are continuing lower. It all stemmed off that initial gap down. And whenever you see a big gap down on tremendous volume, that is a red flag. You got your short-term relief rally, rejected that declining 50-day, now moving lower. And, 50-day is a great thing to put on your charts for the medium to intermediate trend. When something's below the 50-day moving average, we're going to struggle to see a sustained upside move. So really, MU, another semiconductor. This one looks like it could fall off a cliff. So just, not great. Hate to be so bearish, but we listen to price, and that was what price is telling us. Take a look at Mag 7, NVIDIA, obviously Apple. Doesn't look great either. Microsoft, again, all these bear flag breakdowns. Tesla rejected the 200-day. Amazon's breaking the 200-day. Meta's sitting at the 200-day. Netflix back below all the key moving averages. Google below the 200-day. So these are the biggest companies in the world, dominantly trading below the 200-day moving average. So you have to have some expectations here, right? What do you expect the market to do when the biggest stocks in the world are in either stage 3 topping patterns or trading below the 50 and 200-day moving average. That's just not a good look for the markets. And we saw in 2022 when these started to break down the fuel that added to the downtrend in the market. So that's that. Let's take a look at some sectors that are in bull markets. China, this one's 50 days catching up. I did a big segment on China today. So if you want to catch that, check out the podcast. It was released earlier today. But China's looking great. We're watching this closely. BABA as well, just consolidating, letting that 50-day moving average catch up. And then some other places where people are going. XOM, oil, nice trends above the 200-day. Look at CVX, right? Building higher lows, moving higher. This is where the money's flowing. Some natural gas names, EXE, we own this in TurboTection, breaking out of this nice double bottom base. And this one looks fantastic. Was up almost 1.5% today. Some other ones, AR, decent pullback here. EQT, again, great charts. And you can see these charts look a lot different than tech. They're making higher lows. They're trending above rising moving averages. And these are the type of stocks that you want to buy dips on, stocks that are in uptrends above the 200-day moving average. Charts are to the right side of your screen, and that's where you want to buy dips. You don't want to buy dips on things like Tesla. As much as we like the story on Tesla, this chart's a mess. And there's been plenty of dips that if you try to buy, just continues to move lower. So we're focusing on where the money's flowing, and that is predominantly silver, gold, I just put energy, natural gas with EXE, and emerging markets, FXI, CIB. This is a Colombian bank. Again, this is another one to, not very liquid, but just pointing to show where the money's flowing into some of these emerging markets. Fez, this is another one pulling back to the 50-day, see if it can bounce. Another sector I actually want to talk about, XLF, big rejection at the 50-day moving average. You look at names like JP Morgan. This one looks like it's rolling over. Wells Fargo, same chart. Bank of America rejected the 200-day. So you can get the picture there. And, majority of all the sectors look pretty bad, the spider sector specifically. So some of the silver linings is, right, sentiment, the NAM, a lot of people have ditched exposure, but rightfully so, right? Nothing good happens below the 200-day moving average, and very hard to get progress in related stocks in tech and growth. So definitely is a risk-off market right now. We're taking it day by day. Our main, active shorting. Obviously, these are shorter term trades as the bear market rallies can be very vicious. So looking for weak sectors on the short side, and then also longing some of the things that are in uptrends that are seeing money flow, and that is silver, gold. We bought TLT today. You can see that upside reversal back above the 821 and 50-day. Great, and this is acting as a safe haven trade right now. So volatile market, a lot going on. We're following the dual mandate of Revere Asset Management, and we are in protection mode right now. So I think that's all I got for you guys today. You can always reach out to me at connor@revereasset.com. My Twitter is ConnorJBates_. Phone is 855 Real Wealth, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. We've had a couple clients reach out about what our thoughts are on the market, how we're navigating it, and that's one of the main reasons for these nightly videos. We're telling you what we're doing, we're telling you how we see it, we're telling you the measures that we're taking to manage risk, and you can see our downside is only 70 basis points now. We track that meticulously to know, our clients can sleep at night because worst case scenario, if we got stopped out of everything, the downside risk is only 0.7%. This helps us be prepared and not get emotional, especially when the market's so volatile. So hope you guys enjoyed that video. Always appreciate you guys watching, and hope you guys have an awesome weekend. Thanks for watching.